All right, let's discuss one of the SARS engagements, and arguably, this is the simplest of the trio of engagement types. We're going to talk about the preparation of financial statements. All right, let's dive in now to talk about preparation. And we have this illustration kind of saying what requires the most construction work. Well, the most basic basically means I would lay a concrete slab as a foundation is the preparation engagement. Compilation would build up a little bit higher, review higher still, and if you're going for the full house, well, then you're talking audit. Regardless, when we're dealing with a preparation engagement, it needs to be in accordance with a specified financial reporting framework. Now, that could certainly be US GAAP, could be international financial reporting standards, or it could be what the audit side would call a special purpose framework, like cash basis, modified cash basis, tax basis, and the like. Regardless, the governing standards for a preparation engagement is SARS, the Statements on Standards for Accounting and Review Services. Now, it's important to note, when do preparation standards absolutely not apply? Well, really, if you can say, no, there's a separate set of rules for that kind of engagement, well, that's a good clue that SARS don't apply, and specifically preparation standards. Audits do not. But not only that, other types of SARS engagements don't follow these same rules. So reviews and compilations do not follow the rules for preparation. Submitting to a tax authority, personal financial planning, litigation services, valuation services, those all have their own relevant and authoritative bodies and other rules, and it's not SARS. So anything outside of a preparation engagement is not what's covered by the preparation rules. So what do you have to do in a preparation engagement? Well, considering it's the most basic and the most foundation, you'd expect pretty short list of basic, straightforward things. Well, at least that'd be my guess, and you're going to find that's generally true. First off, even on this most basic of engagement, you still have to have a documented understanding with the client. Remember, the engagement letter, which is the mechanism used for this, is a contract. It says, I promise this, you promise that. By putting it in writing, it removes the probability. I can't say it necessarily prevents it outright, but it certainly should make it a whole lot harder to have a misunderstanding. Moreover, if something were to come to light later and there's a disagreement, this documentation, this engagement letter, now serves as a piece of legal proof of what was agreed to. Speaking of, what exactly was agreed to? Well, it should include things like what are management's objectives, what are management's responsibilities, what are the fact that what are the accountant's responsibilities, but also agreement with management that each and every page of the financial statements will have an affirmative statement saying there is no assurance provided, because a preparation engagement provides no assurance whatsoever. It should also include any limitations of the engagement. It should identify the applicable financial reporting framework, and it should go ahead and discuss if there's a known departure or departures from the framework, or if the client has decided in this case that they're going to omit substantially all required disclosures, which they can do. So, what does a typical engagement letter look like in terms of its headings? Well, there's going to be an introduction. Then it's going to go into responsibilities. It will discuss, hi, I'm the CPA. These are my responsibilities. Hello, you are management. Here are your responsibilities. And then, like any contract, anything else that the parties feel are relevant pieces of information to include can be included, right? Like any contract, it ultimately comes down to both sides agreeing to sign the darn thing. So here we see the first portion of a sample engagement letter. To be clear, this is not the same thing as a report where there is an absolutely specific right way to do it. This is a contract. So every firm's engagement letter may look a little bit different, and probably does, but it will have a lot of the same elements. So at the top here, you can see the introduction. Well, you have requested that we prepare the financial statements of such and such. Our responsibilities, and we walk through in there. Here's what we do, what we're not required to do, and so forth. Next, we can see here are management's responsibilities. You can see the laundry list of items that management is accepting responsibility for. And then any other relevant information. I do chuckle at the fact, well, I doubt that many firms would say this goes under the miscellaneous and other category, but okay. Fees. What are we charging for this engagement? And then it's signed by the company and the accounting firm. And that allows us to confirm our written understanding of the terms of the engagement. Now, as you might guess, does it take a whole lot to complete a preparation engagement? No. In fact, in terms of knowing something, it's a fairly short, discrete list. Number one, that client is going to use a framework, some framework of financial reporting. We have to understand what that means, what that framework requires. And, well, the other requirement is we have to be able to prepare the financials. And that's it, because no assurance is provided. In fact, we're so explicit on that point, it's going to be on every single page of those financial statements. Now, there are two different ways to explain that. One is to say, no assurance is provided on these financial statements. That's fine. You could also be more specific in terms of this is not what it is. These financial statements have not been subjected to an audit, review, or compilation engagement, and no assurance is provided on them. One just is a more detailed version, but they both deliver the same bottom line: no assurance. Okay, well, what if, now this is where it gets a little weird because you go, this is the shortest list of requirements I've ever seen, and now you're going to ask, well, what if we can't meet those two requirements? And honestly, do you think you would take on the engagement in the first place if you didn't understand the financial reporting framework? I'd hope not. So it really comes down to, well, you said that there's no assurance and that has to be on every page. Are you saying, what if they don't want that to be the case? They don't want to put that on every page. Yeah. Number one is we can issue a disclaimer, and that disclaimer of opinion would be on every page. Or we could change to a compilation engagement, in which case we would say we lack independence in this case, but we would not be required to deal with that disclosure. Or, as is always an option and is the correct answer anytime we are in a position where we feel like we're being asked to, or we'll be put in a position where we have to provide false, fraudulent, or deceptive information, that is ironclad cause for withdrawal from that engagement. Now, if we ultimately decide we're going to go with the disclaimer on the preparation, it might look something like this. As it says, the accompanying financial statements of XYZ company as of and for the year ended were not subjected to an audit, review, or compilation engagement by us, and accordingly, we do not express an opinion or a conclusion nor any assurance on them. And then we could, on each page, reference this disclaimer instead of having the normal, if you will, the typical way of doing it, which is the statement on each page stating simply no assurance is provided. At least this would give us one other way to potentially successfully complete the engagement. I hope that helped your comfort level with this type of SARS engagement, but there are some additional details we need to cover related to preparations. That'll be coming up.